Australia is likely to miss renewable energy targets by 2030, but the news isn't all bad. Only about 1/3 of retirees have enough money to live comfortably, and an independent measure of airline frequent flyer programs puts Qantas in the middle of the pack. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 16th of September 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, Australia is likely to miss renewable energy targets by 2030, but is making ground in transitioning the energy grid, leading experts have said, just as renewable energy as a share of total electricity production hit a new record.
Yeah, so the news on the transition to renewables isn't great, but it isn't a disaster either. Transgrid Chief Executive Brett Redman, a friend of our show, forecasts that renewable energy will generate 82% of Australia's power by 2031 or 2032, a year or two later than targeted. He said recent delays to major projects probably means the country will miss the 2030 target. That's according to a report in The Australian. UGL Managing Director Doug Moss said the targets would be extremely challenging, but meeting them would be a boon for developers such as his company. Now, UGL is a building contractor for major energy projects. It includes the Snowy Hydro Kurri Kurri gas facility. Mr. Moss said 2030 is a beachhead to aim for, but the 2050 goals are achievable. Now, the federal government has targeted 82% renewables by 2030, the point that Mr. Redman, Mr. Moss has made. We're not going to get it there, but we're not a long way behind.
All right, so 82% is the key number. That's the focus here. Just how close then are we to actually hitting that?
Well, some weeks we're much closer than others. The share of electricity generated by renewables reached an all-time high of 72.2% in the half hour leading up to midday last Monday, so 72.2 versus 82%. Now, last Monday was marginally better than the previous high set in October last year. If we could sustain that level, we'd be on a promising pathway, though experts in the media are saying that we may struggle to rise much further over the next couple of years until more coal power stations close. That's because the coal generators, whose supply is still vital to keep the lights on when solar and wind resources subside, those coal generators need to maintain minimum levels of operation around the clock. They need to be putting power into the grid. The next major coal station to close is Origin Energy's 2,880 megawatt Araring generator. That's the country's biggest. Its shutdown was delayed by a couple of years in May. It's due to close in August 2027. But if we just keep that ticking over, because we need to if we want it to work, it's going to be hard to up the renewables share of the total electricity supply. Solar panels continue to provide a large share of the supply, of the renewable supply at least. Rooftop solar provided about 39% between 11:30am and midday last Monday, according to the Australian Energy Market Operator. It's a much better outcome than the June quarter, when both wind and solar generation was much weaker. Now, a big part of the problem there is that the shorter days of autumn and winter contribute to less renewables generation, and it also triggers a resurgence in coal and gas power generation, obviously, to fill the gap. So the June quarter is always a weak quarter. However, last week, Michael, 72.2%. Not bad.
That's not too bad. Look, this is a big story, and I know it's only Monday, but I'm going to put in a special request, if I may, Sean.
Yes.
On Wednesday, we release the free weekly newsletter, the Fear and Greed newsletter. And if the podcast is about the news, the newsletter is kind of your views. It kind of delves into your opinions and kind of a little bit more background and context. Can I put in a special request that you might cover this topic in one of your stories there? Because I would love to know what you think about this progress and about how we're tracking.
Righto, I will do. I do have quite a firm view on this.
Excellent. And if you want to hear what that firm view is, if you'd like to see Sean's, really your innermost, your deepest, darkest thoughts. No. Most enticing, head along to fearandgreed.com.au and pop your email address in, sign up for the newsletter, and you will receive it when it comes out mid-morning on Wednesday. Definitely something to look forward to. Let's take a look at local markets now. Sean, how did things finish up on Friday?
The S&P ASX 200 closed up 0.3% to 8,100 points, taking the weekly gain to just over 1%. It actually peaked on Friday at 8,143.6 points. That's just 5 points off the all-time record set in August. Gold miners were the standout sector. Hope of more fiscal stimulus in China boosted the big miners. Fortescue Metals Group, for example, jumped 5%. Oil prices were also higher, helping both Woodside and Santos. Some of the lithium companies, they came off. They had jumped earlier in the week last week. The big banks were also lower on Friday. Bit of corporate news around. Singapore-based Olam Agri lifted its bid for Namoi cotton to 75 cents a share from 70 cents a share. That is about 12% more than the competing bid of 67 cents a share by the Louis Dreyfus Company. Olam Agri said it's in discussion with the Australian competition regulators. It's confident of a positive outcome. Some of the big shareholders in Namoi Cotton came out on Friday and tended to agree. So that looks like they're getting close to a deal there. And toll road group Atlas Arteria will proceed with a compensation claim against the French state. Now, this came after the French Constitutional Council ruled that a new tax on companies with long-distance transport infrastructure like Atlas is compliant with the Constitution. Problem is the new tax obviously will hit Atlas's earnings and it wants compensation, so it's basically suing the French state.
Now, after the show, Sean, you have an interview coming up today with Andrew Peros, the co-portfolio manager of the Ausbil micro-cap and small-cap funds.
So we start with the question, why have micro and small caps underperformed large caps and will they continue to do so? And we jumped into it from there. So it's a great chat with Andrew about what's happening in that mid-cap, small-cap end of the market, kind of from about number 50 to about number 300 on the ASX, if you think of it that way. And he also names a few companies that he particularly likes at the moment.
Yeah, and of course, we're not an investing podcast and you should seek professional advice before making investment decisions, but it is always fascinating to hear the research that goes into that. It's coming up after the show. Now, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. What's happening in international markets?
Wall Street's done pretty well over the past week, jumping by around 4%, and it's trading close to record highs, a bit like the Aussie market. Eurozone and Japanese shares also rose last week, while the Chinese market fell. It's a very big week coming up in the US, with recent economic data reinforcing the view that the Federal Reserve will cut interest rates this week. The debate now seems to be whether it will be 25 basis points or 50 basis points. Last week, the European Central Bank cut the benchmark rate for a second time. The Canadian central banks also started cutting rates. The Bank of Japan meets this week. It's unlikely to shift on rates. The Reserve Bank will cut this week. No, that's just a joke, Michael. You know, everyone else is cutting. We're not.
It does start to feel like we are the odd ones out right now.
It does. We will get there eventually. Oil steady, trading around $72 a barrel. Gold's trading just under $25.80 an ounce. That's close to a record level. Bitcoin is back above $60,000 a unit, and the Aussie dollar is buying just over 67 US cents.
All right, plenty to cover. We'll be back in a moment with the rest of the day's business news. Sean, the Federal Coalition is now pushing to not change the Reserve Bank Board, saying it no longer needs to be considered.
It's all a bit confusing, given an independent inquiry set up by the coalition government recommended the Central Bank Board be split into an interest rate setting body and a governance body. The Liberal Party supported the split, though it couldn't agree with Federal Treasurer Jim Chalmers about who would sit on the interest rate setting committee. Yesterday, opposition finance spokesperson Jane Hume said the people currently on the Reserve Bank Board should continue to do monetary policy, which sounds like the opposition doesn't want any change now. Any splitting of the board requires legislative change, and agreement between the government and the Greens at the moment seems some way off. So if the coalition is now saying we don't want any change, it could, after all the hoo-ha, the brouhaha, that's a better word, after all the brouhaha, maybe nothing happens.
How about this? This is extraordinary. Tesla and ex-owner Elon Musk has doubled down on criticism of the Albanese government, calling it far left and fascist.
Yeah. So on Friday, he reposted a story on X from Reuters about the federal government's push to fine internet platforms 5% of their global revenue for failing to prevent the spread of misinformation. He added one word to that post: fascists. Then yesterday, he retweeted a post to his 197 million followers that included the Prime Minister's criticism of Mr. Musk. Mr. Musk added, "Far left fascists love censorship." Under the changes which Labor is proposing, platforms that fail to comply could be hit with these 5% penalties, but that would be billions of dollars. Mr. Musk is a self-proclaimed free speech absolutist that increasingly has sparred with governments around the world. Self-proclaimed free speech absolutist when it suits him, I'd say.
There have been a few inconsistencies in the past, haven't there? There have been a few moments, particularly, I remember there was one in relation to people reporting where his private plane was and things like that. And he was insisting that this is information that should not be released. And like, okay, all right. But anyway, he is great for a headline, isn't he?
He is very good for a headline, Elon Musk. It's getting a bit tiring though, I find. Like it's getting a bit like Donald Trump. He's sort of just too much of a good thing.
Yeah. It's just, and I also wonder kind of what say Anthony Albanese and others in the government would make of it, because it's probably not a bad thing to be in a fight with someone like Elon Musk.
No. Well, actually, last Friday when it happened, Bill Shorten and Peter Dutton were both on one of the morning programs, and they basically laughed at Elon Musk. I mean, there was no disagreement between those two. They were actually, I think Bill Shorten said Elon Musk has more positions in the Kama Sutra on this one, and then Peter Dutton said something along the lines of, Bill, stop talking about the Kama Sutra, which is a fair call. But yes, they're all I think they're all laughing at him, really.
A rare moment of bipartisanship once again. Now, about 2/3 of Australian baby boomers leaving the workforce don't have enough superannuation to retire comfortably, according to research from the industry's peak body.
Slightly more than 30% of Australians are able to afford a comfortable lifestyle in retirement, according to the Association of Superannuation Funds of Australia. Currently, the median pension account balance for men aged 60 to 64 is $205,000, $154,000 for women. To be honest, these numbers were done as at June 2022, so they're a bit old, but the gist of them is correct. The industry standard for what's considered a comfortable retirement is $690,000 for couples, $595,000 for singles, according to a report on Bloomberg. Australia's retirement savings pool is closing in on $4 trillion. About 2.5 million Australians are expected to retire in the next decade. ASFA said that as the pension system matures and balances increase, the portion of people retiring with enough money to fund a comfortable lifestyle will rise to about 50% or more by 2050, which of course is good news.
Now, I mentioned this one at the top of the show, Sean. The first independent analysis of more than 60 airline loyalty programs has ranked Qantas frequent flyer 24th and been critical of the large number of points needed for redemptions, poor customer service and high change fees.
Travel tech company PointMe undertook the analysis over several months, allocating marks to each program across several criteria, including the ease of earning miles or points, redemption rates, ease of booking, and customer service quality, according to a report in The Australian. The reward program of Air France and KLM, known as Flying Blue, I don't know, that's a very good name for a frequent flyer program. Anyway, Flying Blue, it was rated the best scheme, followed by Air Canada Aeroplan, United Mileage Plus, many Australians would be on that one, British Airways Executive Club and Virgin Atlantic Flying Club. Emirates Skywards came in at 11th. Singapore Airlines was 17th with its Chris Flyer program, and Qantas was 24th. Virgin Australia Velocity, it finished 33rd, the same as Air New Zealand's AirPoints.
Bunnings, Aldi and Kmart. How about this? They are Australia's 3 most trusted brands, while Toyota, Bendigo Bank and Nike are on the up.
That's the findings from the Roy Morgan survey released on Friday, and the top 3 are unchanged over the June quarter. Next in order are Toyota at 4, then Apple, Aussie Post, Myer, Big W, NRMA and Samsung. The most distrusted brands, in order of bad to less bad, shall we say, Optus, Qantas, Facebook, Coles and Woolies. Then comes Telstra, News Corp, X, TikTok and Temu. Roy Morgan Chief Executive Michelle Levine said Bunnings is the only survivor from the top 3 rankings of a year ago. Woolies and Coles are the ones who have really fallen from grace, shifting over the 12 months from among the most trusted to the most distrusted. She said the high trust ratings for Aldi and independent grocer IGA showed that the distrust for the 2 majors is not an industry-wide issue. It is specifically for Woolies and Coles. She said their brands specifically have become associated with price gouging, high profits and corporate greed.
The one I'm most intrigued by, the supermarket story is interesting there. But Australia Post,
Yeah.
don't you find that fascinating? Particularly kind of when there's been so many problems over recent years about kind of slow delivery, what days things are actually kind of being delivered, and then the ongoing saga of somehow missing the Australia Post delivery person and ending up with the "sorry, I missed you" slip on your doorstep, even though you were home the entire time.
True.
I'm impressed. I'm seriously impressed that Australia Post is as high as it is.
Yeah, you're probably right. But we have also discussed, if you ever go into an Aussie Post office now or a retail outlet, it's just fantastic. Even when you're lining up, you're looking at things to buy. The retail outlets at Aussie Post are great.
That's right. I mean, I cannot go into Australia Post without coming out with a new air fryer. I
Yeah,
don't know
that's
why
right.
it is. They just see me coming and they stack the air fryers up. It's just, I don't know why. Anyway, well done, Aussie Post. That's a good result. Turning to international news now, Sean, workers at aircraft manufacturer Boeing walked off the job over the weekend, triggering yet more problems for the beleaguered group.
The strike could go on for a while, according to union leadership, as workers strive to get bigger wage increases and an improved pension. More than 30,000 members of the International Association of Machinists and Aerospace Workers, who produce Boeing's top-selling 737 MAX and other jets in the Seattle and Portland plants, began a strike on Friday, US time. Boeing stock fell 4% and has tumbled almost 40% so far this week, cutting the company's market value by about $58 billion US. A long strike is a real problem. It could further damage Boeing's finances. Boeing already has about $60 billion in debt. A lengthy pause in plane production would also weigh on the airlines that fly Boeing jets, including those locally, because it's just difficult to get parts.
All right, up next is Fear and Greed, the week ahead, featuring our resident economist, Stephen Koukoulas, who's back from holidays.
Back from holidays, very, very cognizant of what's going on in Europe. Well, he was off air anyway. We had to stop him from saying too much about it on air. Big week this week. We have got the labour force numbers. Very important. Increasingly, people are talking more. Well, I suppose inflation is still the main conversation, but there's more being spoken about what's happening in the labour market. So we talked to Stephen all about that.
Yeah, indeed. And it's always great to hear his opinions of what's happened. It's amazing. He has been in Europe for 3 weeks, yet he has kept across everything that is happening at home as well. Like he's just, I don't know, if I was going on holidays for that period, it would just be unplug everything and you just out. But he is still across every single thing that has happened in the economy.
Well, he said that, in his downtime when he's on holidays, he goes and listens to podcasts, including ours, and that keeps them up to date with what's going on. I could think of better things to do, Stephen. No disrespect.
I have never heard a podcast host actively discouraging people from listening to their podcast. Anyway, there's a first for everything. After Stephen Koukoulas, after the week ahead, you have an interview coming up, of course, with Andrew Peros from Ausbil.
Yep, all about the small and micro cap sector, what's going on there, how they're performing compared to the large caps, and Andrew gives us a couple of his favourites in that area.
Indeed. 2 must-listen episodes coming up. They are up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is where you sign up for the free weekly newsletter that I mentioned earlier. Thank you very much, Sean.
Thank you, Michael.
It is Monday, the 16th of September, 2024. Make sure you are following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.